Somebody on Twitter yesterday, I think, compared Olaf Scholz to an ostrich who's hiding his head in the sand in order to avoid, the oncoming threats. Or do you think that he's right, that there is no crisis here in Germany? Unemployment's very low. Anybody coming into this country with any skills at all can get a job, and maybe he doesn't need to spend any more money.
I'm afraid I disagree quite strongly, actually. Germany just about avoided a recession towards the end of last year. Growth this year will remain quite weak. So consensus expectations, for instance, for Germany have been consistently revised downwards. And you're looking at growth of just north of 1%, which is a significant downtick from where Germany was just in 2017, growing at 2.6%. And 1% is way below Germany's potential growth rate. And at the same time, the headwinds that Germany faces and the global economy faces is unlikely to disappear immediately. What I'm talking about, and something that Draghi hinted at quite clearly yesterday, was that the manufacturing sector in Germany is suffering tremendously. We have seen manufacturing in contraction for just over 3 quarters now. The inventory overhang is still very much here. And, consumers are the only bright spot, and construction as well. But because Germany is such an export-orientated, such a manufacturing-focused economy, we can see the signs of weakness from manufacturing spreading on to the services sector.
Just pause that thought, because I'm going to come back to the manufacturing story in just a moment, Shweta. Let me just update viewers on a few early movers this morning. Well, 6 minutes into the trading day, and some of these big names that reported numbers are on the move now in terms of their stock prices. So Kering down the most since October 2018 after Gucci second quarter disappoints. That stock being hammered at the open and down by just shy of 8% as it stands right now. We have also, so we've got that company reporting. Anglo-American also a fairly gloomy story this morning after one investor looks less keen. So that stock down by 4%. So there's that going on at the downside. I also want to mention what's coming out of BASF this morning. That stock falling 1.5%, low Rhine levels, once again posing a supply chain risk. And Shweta, this is where I wanted to pick up with you once again on what's going on in Germany, because this is what you described there in German manufacturing is even before we consider what happens if the Rhine, once again, like last year, becomes this big dominant story. Yep.
So last year, there was a lot of commentary about these temporary factors holding down manufacturing in Germany. And that's probably why policymakers were buying more and more time, to see if these factors are simply temporary or there's a more protracted underlying causes there. And it turns out that it wasn't just about idiosyncratic factors. It wasn't just about temporary factors. There is a proper global slowdown in terms of external demand in particular. And as you rightly point out, stuff like, if you start to see more temporary factors come through, it will put even more downward pressure on the manufacturing sector. And I think the more important point to highlight here is the prolonged uncertainty. The emphasis is on prolonged because, this has been going on, this uncertainty around trade war, global trade disruptions has been going on for so long that it is becoming more and more entrenched, and producers are feeling the impact and are sort of, holding back from passing on the cost pressures to the real economy.
Yeah.